Okay, good afternoon, everybody. What I do want to do today is give you an introduction to advanced Fibonacci time and price analysis. And it looks like you already have a background in some of this work, at least I hope so. So what I want to start with is, why would you use this type of Fibonacci analysis? And it's because it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. Now, this works on any time frame and essentially any good market data. Now, typically, I'm not going to go below a 5-minute chart, okay? But typically, I'm working on 30-minute charts and up, and definitely have a focus on starting with the daily chart. Now, I've applied this method to stocks, ETFs, futures, and the Forex markets. And I've also applied it to Bitcoin, okay? And it works well in all of these. It's an excellent methodology to use with option strategies, okay? It sounds like Doc was, talking about option strategies. It's great for that. And also, with this work, you can see things in the market that you will never, ever see using indicators alone. If anybody is not familiar with the Fibonacci numbers, this is basically the number series, okay? And we're not using the actual number series for the work, but we're using the ratios in between the numbers, okay? So basically, if you take 34, multiply it by 1618, that's pretty much going to give you the next number in the series. So that 1618 is in between these numbers. Okay, and you can do some of that math yourself. So the golden ratio is in between these numbers. So the actual Fibonacci ratios that I use derived from the series in this analysis are 382, 50%, 618, 786, 100%, 1.272, and 1618. Mostly for confirming ratios or a very, very large swing, I will also use the 0.236 retracement. Okay, not really when there's a smaller swing though. I also use 2618. That is always my target number 3 for any of the trend setups. And then every once in a while, you get a runaway market, and I will run an extension that is a 4.236, and that tends to act as resistance also. I don't use it that often though. Now, I can show you where, the 618 and the 1618 came from, because it's actually in between those Fibonacci numbers. But what about some of the other ratios? Well, bottom line, they are all related mathematically. So, for example, 1 minus 618 is going to give you the 382 that you often hear about. Square root of 618 is 786, if you're not familiar with that one. 1618 is the expansion of 618. Square root of 1618 is 1272. That's always my target number 1 for any of the trend trade setups. So let's move on from here. Now, there's 3 different Fibonacci price relationships that I use. I use price retracements, price extensions, and price projections. So I'm going to go over each of these and give you some examples. We're going to start a little bit slow, but then it's going to get a bit more interesting when we get into confluence. And I did hear Doc speaking about that a little bit. So we're going to see a lot of that. So we'll start with Fibonacci price retracements, where we're taking a prior low to high swing and using the retracement ratios of 382, 50%, 618, and 786, looking for possible support. Or we're going to take prior high to low swings, use those same ratios for potential resistance. So let's look at an example. Okay, so this first example is in square. It's a daily chart. Here, I've measured a prior low to high, looking for possible support. And, here are the ratios. Now, in this case, we really only saw a reaction right around the area of the 618 retracement. Okay, because the question you're going to ask is, which retracement do you trade against? But we're going to get into that a little bit further in the presentation. This next chart's an example. This is in AMAT. This is a 30-minute chart. Here's where I measured a prior high to low swing and ran the ratios. And you can see nothing really happened here. You did have a short-term fail at the 382 retracement, maybe a micro stall at the 50%. But again, 618 ended up being pretty important at the 58.40 area. In this case, it was the exact high. It's not always going to be exact. I don't want you to be a perfectionist, because if you try to be too perfect, you're going to miss a lot of trades. Okay. And also the other question that you may be asking is, well, why did she use this swing? Well, I'm also going to be using this swing and others, for these price relationships. But for the sake of the example, I didn't want to clutter up the chart for you. Okay, so that's what a retracement is. A Fibonacci price extension is essentially a retracement beyond 100%, okay? Because you're still using only 2 points to run these price relationships. I'm measuring a prior low to high swing, and I'm extending down past 100% using the extension ratios of 1.272 and 1.618. And this is where I'd be looking for possible support if I ran a low to a high, or possible resistance if I run a high to a low using these ratios. Okay, so let's look at a couple of examples. This first example is in Facebook. And actually, there's more than one example on this chart. So here's a prior high to low swing. Again, we're only using 2 points. I'm using those extensions that I talked about, the 1272 and the 1618. Now, in this case, we actually had 2 times where the 1272 kept the market for a while, and you did see a reaction from it, okay? But I'm not only using single levels. We will get to that. But here's another extension on the same chart, a prior high to low, run the extensions. Well, 1272 didn't do anything in this case, but the area of the 1618 extension came in at 184.10. It looks like the actual high. It's a little bit difficult to read, but it looks like 184.25. So absolutely close enough. If you get near an extension, you always want to watch for a move to possibly terminate, because that's where a lot of moves do terminate. Okay, another example of a price extension is in the stock Intel. This is a daily chart. Here's where I measured a prior high to low swing, ran the extensions. Now the 1272 was hit and cleared, but the 1618 came in at 50.85. And again, it's another example. I mean, they're not all going to hit exactly, but 50.85 in this case was the actual high, which was followed by a decline of $5.80. Okay. We didn't see anything at the 1272, but like I said, anytime you extend a prior swing, you want to start trailing up your stops, okay? Because many moves tend to terminate at extensions of prior swings. Now, here's, this is a pretty old example, but just a good one. This is a weekly chart on CMG. Sometimes, you'll have these moves and they seem like they go on forever. Well, you really want to know, where might this move terminate? So in this case, CMG, we had a prior major low to high swing, ran the extensions. Now we barely saw a stall at the 1272 extension, but at the 1618 extension that came in at 262.71, you saw a beautiful rally. Now it doesn't look like a big rally, but 263 was the actual low. So again, not a perfect hit, 262.71, but absolutely close enough to look for a reaction. And even though this doesn't look like a huge rally, this was $82.88 off of this extension. Okay, the next price relationship that I like to use is called the Fibonacci price projection, but this is where we're using 3 points and we're essentially comparing swings in the same direction. So for a projection, what I'm doing is I'm measuring a prior low to high swing and then projecting from another low, so a disconnected low. So 3 points, 1, 2, 3. And I'm using always 100% and sometimes 1618 for these projections. Now, there are other people that will use, 1272 or 1382, and that's fine. But I found that you don't really need it for these setups. that we find every single day. So again, for example, we're in a low to a high, project for another low with 100% and 1618 looking for possible resistance. For possible support, we do the exact opposite, take a high to low, project from another high, looking for possible support using these ratios. Okay, so let's look at a couple of examples. This is an example, it's an old crude chart, but here, this is where I'm comparing swings in the same direction. I had a prior high to low swing that was $3.12. I projected that $3.12 from the next high because you like to compare swings in the same direction because they tend to be similar to each other. So in this case, the projection came in at 55.87. The actual low was made at 55.88, which was just within a penny of that projection. So definitely worth watching. I mean, you had an initial, nice reaction, a pullback, but we ended up still holding that original support, and then, a beautiful rally that followed. Okay, so that is an example of a price projection. Here's another one. This one is Google on a 60-minute chart. Now here, I measured a prior low to high swing. So I did use the 100% projection, and, it didn't offer us any resistance in this case. We blew right through it. But I also ran the 1618 projection because it also might give us some resistance to the move. This came in at 1097.88. Okay, if you run this low to high and then project from here, 1618. And the actual high in this case was made at 1097.51. So again, not a perfect hit, but we did start to see the market pull back after we reached that 1618 extension. Another example of a projection, a lot of times I'm using projections for symmetry. So symmetry, my definition is similarity or equality when comparing swings in the same direction, because sometimes they're exactly equal, okay? So here, for example, I'm looking at a prior low to high that was 91 points in the S&P futures on a 30-minute chart. Now, since it was a downtrend, it was lower lows and lower highs, what you want to do is project these prior rally swings to compare them to any new rally swings to watch for a possible failure. So in this case, we projected the 91 points from this low. When we started a rally, that gave us resistance at 30.97. The actual high in this case was 30.96.25. So, we hit the resistance, we held the resistance, and what we basically do is we go down to a lower time frame chart and we look for a sell trigger at this time. Okay, so you can see the symmetry here because these swings were very similar at 91 points and 90.25 points. Now I did add this one today because I want to give you, some more recent examples here. This is actually Bitcoin futures. And here it's the continuous contract. Again, we like to compare swings in the same direction because they tend to be similar to others. In this case, I had two larger swings, and I also would have used these in the past, but I know that, we already went through that. But I had a really large swing that was 15,750. I had another one that was 17,190, from low to high. And then what we did was we projected both of those from this low that was made on August 5th. And that gave us two areas to watch for possible failure. First one was 65,115. Second one was 66,555. Note that the first area of resistance ended up holding. Now, was it a perfect hit? No. 652 even, but absolutely close enough. If visually you don't see it going through it by much, I count that, it's close enough. It can go through it by a little bit, but definitely watch these areas. It doesn't have to be an exact high or low, but you'll see that these two swings were very similar, 15,750 versus 15,835. And what happened after that from this high, and I did post this on Twitter as it was happening, we had a drop of 12,380 from what? Clicking 3 points on a chart, basically clicking this low, clicking this high, clicking this low, and using a 100% projection. Okay, so that's it for the, basic examples. But what I want to talk about now is a very powerful trade setup that I use every day. It's called a Fibonacci price cluster. So the definition for me, since I just made it up, is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. Okay. And basically, we're looking for the confluence because that strengthens the setup. All right, now this next slide, this is pretty much the trick question, but what would have told you that the June 11th low was important? What would have told you to look at a buy in Tesla before this rally occurred? And nobody's really supposed to be able to answer that question. So let's just go into the reasoning. So here's the same daily chart of Tesla. One of the price relationships that I had, because I'll run all possible price relationships and then see maybe what comes together. So in this case, I found that there was a prior high to low swing that was $19.81. I projected that from the next high for possible support. It gave us 167.07. Well, we came in a little bit higher than that at 167.41. But so far we have, 100% projection at 167.07. On this next chart, it's still Tesla. I took another prior high to low swing and compared it to this swing. So that was a swing of $31.90. This ended up being similar, not equal, but similar at 31.46, and it came in at 166.97. So now we have 2 levels in that same general area off of the same chart. Now, this gets into, it's a little bit of a teeny extension, but it still counts. Here's where we had a prior minor low to high swing, and you can go back and, actually run these yourself, and you'll see where it all came together. But we had a 1618 price extension of that low to high that came in at 167.43. Actual low was 167.41. And then still on the same chart, we had an extension of another swing. So it wasn't like this full swing, but it was this low to high, which is also valid. 1272 extension of that swing is 167.23. So basically, we had a price cluster, which included two 100% projections, a 1272 extension, and a 1618 extension. And you can see how they all come together here from the different swings. It came in at 166.97 to 167.43. The actual low was made at 167.41. And we hit and held the support, and it was followed by, at the time that I took the snapshot, it was a rally of $103.59. Okay. That might have been the high. I don't know. I don't exactly remember right now, but let's also take a look at how you would have gotten into this trade. Well, I like to use triggers. A trigger is essentially the price action that I want to see that tells me that it's worth, I live in Vegas, so placing a bet against this trade setup decision. Okay, so for me, what I use is a moving average crossover. That's part of it. I use the 834 EMA on a 15 or a 30-minute chart for a swing trade entry. But what I also like to see, and you don't have to use it if you don't want to, but it helps. I also want to see a pattern shift. So you can see over on the left, it's lower lows and lower highs. I want to see it take out a prior swing high also. That tells me that we're probably shifting patterns to higher highs and higher lows. Okay, so that's the combo that I use. And let's see, it says, yeah, the crossover was around the 173 area here. At that point, your risk is either defined below the low made prior to the buy trigger or below the low of the cluster zone. Either one is okay. But that's how we put Fibonacci price work together with, a trigger for, a trading plan. Now, this on the same exact chart, there was a secondary entry. Okay, because I'll run these charts every single day, and Tesla is one that's part of my service. And here, what we did was I found more symmetry. So I took this high to low, projected it from the high. I took this high to low, projected it from the high, and just ran a simple 618 retracement. Now I would have run the other ones also, but this is where it clustered. So I'm just showing you the cluster here. So we had two 100% projections and a 618 retracement. Came in at 175.82 to 177.37. The actual low was 176.92, which is directly within that zone. And again, it hit, it held, and it triggered. So a lot of times, if you miss the initial entry, we can always find secondary entries either on the daily chart or an intraday chart. And a lot of times we will use a 30-minute chart for that. Okay, here's another example, which is going to give you a little bit of a preview of Fibonacci timing. Now, a lot of people say that they time the market, but they're timing the market off of the price action. They're not timing it off of the actual time axis. This is different that way. We're actually using the time axis of the market, and we're measuring prior highs to highs and lows to lows and projecting forward in time and looking for confluence, because that's where we'll see the market reverse often enough. It doesn't happen 100% of the time. Nothing is 100%, but it happens often enough that we watch it. So this is actually an example. This was actually late July, where I had a price cluster in NASDAQ futures on the daily chart. So we had this in advance, in the nightly video, that we had 187.01 to 187.55 as support. But what happened was we also had a histogram. So there's two ways that I do timing. I use the histogram on the Dynamic Trader software, which was created by my mentor. I wouldn't be in business if it wasn't for Robert Miner. So, I have to give him credit for that. But we had this timing histogram, because if you are trading down into a timing histogram, you're looking for a reversal back up. We also had price, so you had price and time come together, and the initial rally, and it didn't last, okay? But there was a rally of 721 points. If you are a day trader in NASDAQ, that's enough, to take some day trades off of, okay? So that was a NASDAQ setup. Here is an example of how you would have used a 5-minute chart. So for day trades, we look at anywhere between a 1-minute chart and a 5-minute chart, typically, unless you're trading stock index futures. There's a lot of people that will use a 377 tick chart, which will get you in faster, if you are trading S&P or NASDAQ futures. But here, this example is a 5-minute chart. This is after we hit the support. Okay, where are you seeing the reversal? Well, we took out this prior swing high, and on the 5-minute chart, you had the moving average crossover. So once both of those occurred, again, you can take the buy side. And you can give yourself a set amount of risk, but typically I like to look at, underneath the last low. But if that's too much to risk, you could always look at, just a set amount of ticks that you are willing to risk. But you'll definitely want to test that for yourself first. All right, here's another example. And I will stick around for questions afterwards. But here's another example. This was in IWM. Now here, we had a price cluster of support that came in at 194.80 to 195.19. It included a 786 retracement of one swing, two 100% projections, and a 618 retracement. So we took the high to the low here. That was $5.28, projected it from here. We took this high to low, which is $5.55, projected it from here. We ran this low to high. There was a 786 retracement, this low to high, a 618 retracement. So here was our cluster. It hit, it held. We always go down to the lower time frame chart because you want a trigger to fire off as close to where your definition of risk is. And your definition of risk is either under this low or underneath this zone. And in this case, we met two targets on the upside or it was a rally of $9.14 from the support. Now, I'm not expecting everybody to get the low and exit at the high, but if you can get something in the middle, you should pretty much be a happy camper with that. All right, I did want to show you one from today because, I just look at, this is Netflix, which is one of the extra charts that I look at every day. And there was a cluster that we had that included Symmetry, and the green lines are always extensions. So I kind of color code this so that I know what's in there. So here I know that it's Symmetry, and I know that there's a couple of extensions here that came in between 660.55 to 661.48. Now, the potential, if we continue to hold here, is up here, but that would be for a swing trade. I want to show you a day trade entry, though, from today. So here, September 11th, this is a 1-minute chart of Netflix, okay? Here is where you hit the support and held. Here is where you took out a prior swing high. And then here's where you had the 834 EMA crossover. Okay, so I think it was maybe 664-ish. Also, if you get like a quick pop after a trigger, you can always wait for a little bit of a pullback. You want to try to get a better price. But bottom line, this is where your entry would have been triggered and your risk was here. And this is on a 1-minute chart, but this is not one that I would take overnight unless it also triggered by the end of the day on a 15 or a 30-minute chart. But you can absolutely use day or daily levels on a chart for a day trade. All right, this is another example of a cluster that I had in the S&P cash. And again, there's a lot of swings that you have to work with, and I do the work for everybody because a lot of people don't want to do it for themselves. But I had a 786 retracement of one swing. I had an extension here, an extension here. I had another projection. You had this decline, which was $267.28, projected from here. This ended up being similar, 267 versus 269. Okay. Bottom line, we ended up having a cluster between 37.96 to 38.11. It hit, it held, it triggered, and we made these upside targets. Okay, this is a little bit older example. All right, let's see what else we have. Another example of IWM here. Again, took a projection from here, low to high, projected, had a 618 retracement of this swing, had a 786 retracement of this swing. So we had 786, we had 100% projection, 1272, and a 618 that came in at 20043 to 201. Looks like 20041, so just short by 2 pennies was the resistance. It hit, it held, it would have triggered, and when I took the snapshot, it was a drop of $5.39, which is not bad for a trade in IWM. All right, I think I'm going to skip a couple of these because, this is an old example of Apple, and again, it's a cluster, and, you can see kind of the swings that I used there. This is an old Symmetry example in the S&P where, a lot of times you won't see some really good support on the daily chart, but you might see it on the weekly. So here is where I compared some of these prior swings from, way back over here. And, and I would use all of them. So I'm just labeling the ones that happen to hit here. Okay. So 315, 336, 324. This ended up being 311, which was closer to this swing that was 315. Again, not a perfect hit. But if you see all of these come together like this, watch it for possible support. Okay. It hit, it held, it triggered, and this is what followed. So not only did we make the targets off of this low, we also made one of the bigger picture targets from over on the left-hand side. Here's an example of this doesn't always work, and there's plenty of those. There are a ton of clusters that the market will go through every day, but a lot of times they won't trigger. But when they do trigger, guess what? Your risk is defined. If you had a sell trigger against this resistance and it blew through, you're out. But the other thing that this tells you, and I believe I framed it this way when we got into that time window, was that if we don't hold this resistance and if we blow through it, it basically opens up the door to much higher. Okay, so in that way, you know, breaking an area can also tell you something about the market, or at least, you know, we look for the next area to be tested. Okay, so now I'm going to get into timing. I won't give you too much on this because I do want to give you some examples and see if there's any questions, you know, about any of the current markets I'm looking at. But what about Fibonacci timing? So we're basically using the same ratios that we use on the price axis of the market on the time axis of the market. Okay, so for example, we're going to measure the time between a prior high to high swing and then multiply that time by the ratios and project the results in the future. When we see time clusters, we look for a possible change in trend. Okay, and also when you have time and price come together, you have a much higher probability setup. Okay, so let's take a look at some examples. So this was an old example that I had in Facebook. Okay, and I went over basically where we came up with the price support, but we also had timing. We had, let's see, this is a high to high swing, 618 in time. Okay, so basically it takes the number of days between this high to high, multiplies it by the ratios, projects forward in time. So July 19th was one date. We had a, looks like low to high swing, 100% in time came in on July 20th. I had a low to low swing, 1618 in time came in on July 19th. And I had another low to low swing, 786 in time of that swing came in on July 21st. So we had 4 cycles between the 19th through the 21st. Since we were trading straight down into the cluster of time cycles, we were going to anticipate a possible reversal back up, which is something that we did get in this case, but we had time and price come together here. Okay, so time and price, you look for your trigger, you know where your risk is, it's down here, you know where your potential reward is, it's up here at the extensions. That's for a trend trade setup. So I always use 1272, 1618, and 2618 for targets for a trend trade setup. But typically, initial targets for a counter trend setup are typically just going to be the retracements and projections of other swings. Here's a more recent timing example. This was in NASDAQ cash. I use NASDAQ cash because the futures contracts just don't have enough back data for me to be happy to do these. You know, a lot of times it's all messed up over here on the left. So in this case, I found a high to high swing. 618 came in August 22nd. I had another high to high swing. 100% in time came in August 22nd. I had another high to high swing, you know, this high to this high. 100% in time, August 23rd. I had a low to low swing. It was actually this low to this low. He had a 50% on August 23rd. And then I had another, I had a high to low swing. So it's this high to this low. And then we had 786 come in on the 23rd. So I basically had, you know, August 22nd, 23rd as timing for a possible high in NASDAQ. And the market was going straight up. I mean, we had a phenomenal rally since this last low. So, oops, sorry about that. It was a vitamin reminder. So this one here, we had resistance that came from a high to low, 786 retracement. And I had a projection of this low to high swing, which was 2501.19, projected from this low. This ended up being very similar at 2503.51. The zone came in at 199.36 to 199.94. Actual high was made at 199.38, and this was followed by a decline of 15.37 in NASDAQ. Okay, So since the market was trading straight up into the timing and we had time or price resistance also, this was really an important area to watch. It took a while to unfold, but we did see that healthy reversal there. And then this was a little bit older example, did the same thing with S&P cash, where I had a prior high to high, came in on July 16th, another high to high, 786, July 16th. This was more of a minor swing, high to high, July 17th. When there's very small swings, I'll only use main ratios like 618 and 100% and 1618, because otherwise you're going to have a timing bar every other day, and that's not going to be helpful. We had a low to low, July 18th, another low to low, July 15th, another low to low, July 16th, and another low to low, July 17th. So we had the time cluster of 1, 2, 3, 4, 5, 6, 7 cycles that came together between the 16th through the 18th. Actual high was made on the 16th, followed by this decline of 550.41. Okay. And again, it's not always going to work, but you always want to watch it because it does work often enough. And that's what you need to know. I have one other example of where we had a histogram for a possible low. This was early August, where I ran a histogram. Okay, so the histogram from Miner's program, basically, I tell it which highs and lows I want it to use in the analysis. And I project, like from the last high, to project for the next possible low. So the histogram's a little bit different. It is directional. So it showed me that I had August 5th, 6th timing to anticipate a possible low. Actual low came in on August 5th, again, followed by this beautiful rally. Initially, well, when I took the snapshot, it was 442.72. And I think, oh yeah, this is just an example of what the actual histogram looks like. And this will be my last slide here. And here, it shows me where there's a confluence of timing. It will actually list the cycles down here that it's using in the histogram. And what I look for is standout dates. And then those are the dates that I use. So these were the highest scoring dates. It showed me August 5th, August 6th. And again, that was just, putting your cursor on a button and run the report. And this is the information that you get. Okay, the timing for possible lows and highs. So that is actually my last slide. I think I'll leave us on a more interesting slide here. And I do want to see if there's any questions. Now, I didn't have the chat open until now, so I'm going to open the chat. All right, and see. All right. So do I consider the levels of wave degrees minor? No, I don't. Okay, I do work with, my work is done on ElliottWaveTrader.net, but I'm not going to claim that I am an Elliott Wave Trader analyst, because I am not. How this all happened was, somebody was telling Avi that they were doing extremely well matching my Fibonacci work with the timing with their Elliott Wave work. So there are times where it definitely comes together, and there are other times when it doesn't. It just kind of has a life on its own. So I do not consider that. Okay. Okay, the tool. Well, on the dynamic trader, if you're doing the histogram, it's called the, no, let's see. I have here. So under the reports, it's called the dynamic time projection. So for example, let's see if I did it. I think this was the one that I had before. Like to project the last low. Let me see if this was actually where I projected from, or was it from here? I don't know. I used one of these highs, so let's see where it came in, because usually this one too, that's not enough. So from here to there, like 9. So I'm going to go reports, dynamic time projection, make a new report. It switches to calendar day mode. The outright cycles are trading day mode, but these are calendar day mode. And if I change this to like 7, maybe it's okay. So this is where the standouts came in. Oh, this was actually the NASDAQ. So NASDAQ also had histogram, August 5th, August 6th. So it's called the dynamic time projection tool in the dynamic trader software. Yeah. Yeah, I have more time lately. I have a couple of gals covering the room for me, doing a lot of the actual chart work, and I do the end of day videos and some extra charts every single day. Are there any other questions? And let me know if am I the one that's supposed to mention the where they can find me, or is that something you're gonna do? I still do have time for questions though, if you have any. But basically, you know, what I always say is the way you make money with this work is setup plus trigger equals trade entry, and then you manage it. Sometimes I will teach people individually how I use it. I think Bob has, you know, some lessons, you know, if you get his software, but if you need help with the program, actually, if you do get it, you know, decide that you're going to get that, I believe that you get an hour with me training on Zoom. But one of the things that I've done though is I do have 2 free videos on the dynamic trader and how I use it on YouTube. So if you watch that, then ask me what you still don't understand, and that would be great. Okay, so the 1272 was what, the square root of 1618? Oh, as far as that's a good question. As far as oh, also if you want to look at examples, you know, I'm on Twitter, Queen of Fibs, so you can go back through a lot of those examples. I have a free YouTube channel. There's tons of examples in there. But let me talk about exit strategy, because basically, you know, with some of these setups, let me see if I have that. There's a gold. Okay, so like here's a gold setup. Okay, where we had hit and held, and we had all the moving averages on the right side, which I like to see, but I know that my target has not been met yet. Okay, so I do shoot for a target that's up here, but because we don't always meet targets, I would have people basically trail up stops, maybe using a 30-minute chart as you go, since we don't always meet the target. But I don't necessarily recommend like getting out of everything at the target. You might get out of some of a position, but honestly, a lot of these run way more than like, you know, some of the minor extensions. You know, some of these will rally for 2618. And then you're going to miss all that if you don't trail up a stop. So I will typically have you trail up stops, maybe exit partial position at the extensions if it's a trend trade setup. And one of the things, if you ever do a counter trend trade, I would have you, well, first of all, if you're not good at trend trades, don't even bother with counter trend. But if you do, if you're okay and have experience, you want to take, you know, counter trend, I would say with those, you want to get to a break even ASAP. Okay, because a lot of times, you know, they like, yeah, you've got a nice short covering rally, but then the market fails, rolls over, and dies. Okay, awesome. So Yeah, because I'd like to share the replay too. All right, as far as NVIDIA, this is my weekly chart of NVIDIA. Okay, this has or did have a triple cluster at the low here. Now we did see a nice rally. Have we met the target? No. You know, obviously we got sidetracked over here. Now, if we look at the daily chart that I have in it, now I had a support decision. Now we didn't have a lot. I want to be super careful with this one. It did trigger a new entry because we did have a 786 retracement that overlaps a 100% projection at the 99.37 to 101.79 area. It triggered a buy. Your risk is either under this low or under here. Potential target one is here. Bigger picture target off of this swing. Target one would be here, 154.38. Okay. Now, the reason why I'm cautious is because you're still below the 50 simple moving average, and the 513 EMA combo is in a sell mode. You know, here, 5 is below the 13. A lot of times that's tough to go against, because look over here. Here's the 513 cross to the downside. You had a healthy decline that you might not have wanted to sit through. So when you get involved in a trade where you don't have the averages on your side, again, I'd like to get to a break even as soon as possible. But again, this would be target. This is a target. This is a target. And this is a target. And the trigger, here's a trigger on a 30-minute chart. You would have had a trigger sooner on a 15-minute, but here's where you had the moving average crossover. And you also you took out a prior swing high way back here. So definitely a shorter term chart would have gotten you in sooner, but you know, you had setup, you had the trigger. It is a little bit counter trend because of the daily averages. Yes, there is going to be a recording of the presentation. Absolutely. All right. Let's see. Let me just go through my current charts. Well, this was where these are like the extra charts I do during the day, but like Microsoft, I don't have anything great right now. We're kind of in the middle of decisions. But Netflix was one of the examples I showed you. Netflix has potential to 725.07. What I don't like about Netflix at the moment is that the 513 hasn't quite crossed. Well, wait a second. Nope. Almost crossed back to the upside. If we can have the 513 cross back to the upside, then this increases the odds for this potential upside there. I haven't done the timing on NVIDIA just yet. So I don't know that. I mean, I could do the histogram timing on that. Let me go through a couple of these others and see if there's anything. Oh yeah, we did have a buy decision also in Meta, but again, 513's not, you know, not on the right side for me to feel more comfortable with it. So you'd want to be at a break even already in this one, but it does have potential to here. And I don't have anything. I don't like silver that much. It's got mixed parameters. You're above the 200, but you're below the 50, and the 5 and 13 are in a sell mode. I do have an important resistance decision, but you can look at it this way: 29.47, 29.65. If we trade up into this area and it stalls and it gives you a sell trigger, you can take a trade. But if it starts to push through this same area, then we are more likely to try for some upside targets. Now, my gold chart is much more constructive than this silver chart. And then, yep, I already showed you this example of the symmetry. Dow diamonds also on support. Okay, if we hold this low, potential targets up here. Let me see about, I also have support in JPM. You know, there's a ton of setups. We always have multiple setups, and you know, it's really difficult to follow too many markets. So most people just follow their favorites. A lot of them trade the stock indexes. and don't touch the stocks. And then some of them I trade, some of the stock work that I do. And let's see. Yeah, I don't think timing's going to help here. Typically, I'm looking at timing if we're making a new high or something. But I can see if maybe there is something short term, but I'm not sure it's going to show up. Because I'm not going to do all the individual cycles right now because that takes a little bit too long. So if you do that, 1, 2. Yeah, like the next, we have a really high scoring date over here. Where the heck is that? That looks like, oh, that's 9/25. But the next grouping of cycles here looks like this is more like, there's some time resistance. Looks like between the 12th through the 14th. Okay. But, it might just give you a pullback that you might want to buy. Okay. So it doesn't mean that it's going to put in a major high. It might just give you a pullback that you'd want to set up on the buy side. Okay. No, saving the histogram. I don't know. I don't have a chart for AU. I mean, I have stock data. I mean, it's not. I mean, what is AU? I don't even know what it is. I mean, I'm mostly doing stocks and futures. Yeah, no, I mean, I can show you my regular gold chart, but I don't have the other chart. All I know is that we had time and price at this last low in gold. I like that we are above the 200 simple, above the 50 simple. 5 and 13 are in a buy mode. So since all the averages are on the side of the bulls at this point, I'd still be looking for some higher prices. But again, we don't always meet the targets. So, you don't want to be like, yes, I'm going to wait for this target because she says, that's the target. And then all of a sudden it goes like this. You need to have your stop in place. Okay. The 1272, I noticed that once something meets a 1272 extension, it's in a place where it's more likely to give a pullback. But that was what, the square root of 1618, right? But I see it over and over again. You get to an extension. And again, it's not always going to be the 1272. Sometimes it's the 1618. Sometimes it blows through and goes to the 2618. But should you protect profits and start ratcheting up those stops if you hit a 1272? Absolutely. That's always my target number one. Sure. Okay. Well, I hope it's okay that I mention it. Basically, you'll find me on ElliottWaveTrader.net, and you do have an access to a free no credit card trial for 2 weeks. If you want to check out what we do, we basically have a trading room that the girls are running the charts. I have Tammy running the charts in the morning. I have Shannon running them in the afternoon, and I'm in the background. And I'm also doing the 10 or 11 extra charts every single day, there to answer questions, maybe not the full day in the trading room, but you can reach me. And then I do the end of day video wrap up, which basically goes through all the charts that I cover, Apple, Amazon, Google, Nvidia, Tesla, gold, crude oil, and then we have S&P cash for the timing, NASDAQ cash for timing, S&P futures, multiple time frames. A lot of times we do use the 120-minute chart for the S&P and the NASDAQ, and then also 30-minute chart and 10-minute chart. And then I also follow IWM. That should be under dynamictraders.com if you're interested in his software. Yeah, I believe it has an S at the end of it. Because if you look at a different one, then without the S, it's going to take you to the wrong place. Okay, it doesn't look like. I think I've answered all the questions, unless you have any more. And I know that, it can be overwhelming, to have all this information thrown at you at once, but you can definitely get it. I mean, I trained Tammy how to do the price work, but she had to sit next to me for 3 months. Not Tammy, Shannon. She sat next to me for 3 months, and then I threw her into the trading room and she started doing the charts. But that's watching me for, 4 hours a day and then asking questions, and then she was able to take over. So you can do this. All right, I'm just going to leave you the wavetrader.net website. The area that I'm in, it's called Fibonacci. Let me make sure that I'm doing it right. Yeah, Fibonacci markets and stocks. You just make sure that you have that checked if you want to see what we do, because we basically have a Zoom room, 2 videos a day. You got a morning update, afternoon update, and yeah, that's that. Everybody, thank you for joining me today. I mean, I'll stick around for maybe 1 more minute and see if anybody else has any questions. But you can also find me at Queen of Fibs on with the check mark on Twitter. All right, well, thanks for having me.